another video from High on Pips Trading. So this is our second video on Gbpjpy. I made a price speculation on this pair last week about how price was going to play out last week around Sunday. So if you go back and check in our channel, you realize that there's a video on Gbpjpy talking about how price, and you study and see how I speculated that price was going to play out. So today, for proof and review, and also study and see how price did and how price delivered. So this is a price delivery review from my last price speculation. So this first slide, this is a slide from last week. I just took a snapshot so that we can have a recap on these lines that I drew on this H4 chart. So I drew these lines here, saying there was a breaking structure here and there was a shift here. There was a breaking market structure. Price returned above there to an order block at an optimal trade entry, which is where our sell orders were supposed to be placed. On a lower time frame around this area, there was a market maker sell model. And then I said and I speculated that price was going to drop down all the way and take out these lows here, and I put up this eye showing that price was looking to take down these lows and then take out this low to cover this fair value gap here. So price is around this area on 152. So let's see how price played out. So now this is a 4-hour chart on how price played out. So the whole week, as you can see, price has been consolidating almost the whole week, from Monday to around Wednesday, Thursday. Price was in consolidation, but it never broke. Where there is that gray point there, that gray area, is an order block on an hourly time frame. They never broke that point. So that is how you break, you frame your setup from a higher time frame to a lower time frame, so that you get a better entry. If you enter a sell using a 4-hour time frame, your stop loss will be relatively too high. But if you enter from a lower time frame, as you can see, you would have entered above there, and there's this pin here which pierced this high. If your stop loss was too close above this high, you could have been taken out by that pin. So your stop loss should be relatively between 10 to 20 pips, including spread, above or below your entry. Because sometimes brokers, not sometimes, but most of the times, they manipulate price. So on another broker, this is forex.com. So on another broker, let's say Oanda, you may realize that that pin did not cross that gray area and did not cross above, did not page those highs. So price delivery played out perfectly, though it played with some emotions. They came down all the way and took out the sell side liquidity there, which looks perfectly well from a lower time frame. So there's a fair value gap around this area, and they are relatively equal highs that look clean on a on a lower time frame, which will be taken out eventually very soon. So right now there is this fair value gap, the H1 fair value gap there, in between those blue lines, which just got covered. Now I'm anticipating that price should come all the way down. So around this area on a lower time frame, there is a potential area that price is going to reverse and go back up. But if they come down and take out this low here, which means I really expect them to come all the way down and take out this low here, the fair value gap. Let us go down to a daily chart. Okay, so this is a daily chart. So this is where price closed, and for the past 2 days price started moving from Thursday there, and it started falling. Thursday, this is Wednesday, Tuesday, and this one is Monday. So price went up, and then they never broke the high, except that candle, of which on another broker may realize that they never broke that low. Price delivery came down. So let's see from an hourly time frame, where we're anticipating that price has to come down and take out this low. Once they take down this low, the next area of liquidity is to cover this fair value gap, which is something that we are going to be watching, which is also the sell side imbalance, buy side imbalance. So this fair value gap has to be covered. So now let us check from an hourly time frame. This is where the perfect price action is happening. This was the structure from a hourly time frame. Price returned to an order block above there, which is where my entry, was going to be. Now look at that pin, the pin for pain. So if your stop loss was too close, probably you were taken out. So price was manipulated over there. So your stop loss should be around 10 to 20 pips are above your entry. So price was in consolidation, and then on Thursday price moved down. They took out this low, which is where partial profits were taken. They must be taken below every low, and then price broke that point. Look how price reacted there. They left a pin there, convincing those who trade support and resistance that they were going to go up. Then they broke the low. They came back up to mitigate around this area. On a lower time frame, there is a breakout there where they mitigated on. And then if you go on a lower time frame, you realize that there is a market maker sell model around here, where you can enter or place more sell orders. You can remove your stop loss from this point and scale in above that point. As for me, I did not, because I was anticipating that price may come back and cover this fair value gap before going down. So but price then just went down from that point. I wasn't willing to take the risk. Look how they reacted. They took this low on the sell side liquidity, and they reacted as if they're going back up for those who trade support and resistance, and they covered that fair value gap around there. There's this fair value gap which they covered it here. On a lower time frame, you will find a market maker sell model around this area. You take it down. Look how they cover this fair value gap here, and also they took out this low. There's a sell side liquidity here, which is a sell side imbalance, buy side inefficiency, and was covered yesterday here on Friday. They just covered it as they closed the market on Friday. So as they open on Monday, I'm anticipating that price, I'll see what they're going to do. Mondays sometimes are not good days for trading, but I'm anticipating that they should continue to take down this low. These equal lows must be taken out here, and it is also a fair value gap from the high time frame, from that daily time frame. Before they come here, I anticipate that they should rally up to cover this fair value gap around here before coming down to this point, which is around the 151,400 price. And it's also, there is also a quarter point there, so it is the most likely price that price may start rallying up. So we just watch how price plays out. Sorry. So it's a matter of watching how price is going to play out. So on a daily time frame, see, that is the area I'm talking about. There's a fair value gap, and where that this fair value gap ends, there is a major whole number, the 150, 100. So I'm anticipating that this is where price should start rallying up, buying. So this is where I'm anticipating that price should start buying from. Now this is the entry that I made on the Gbpjpy pair. So this was my entry. I sold it there on a lower time frame, and then look where my stop loss was. So as they took out this low, I took some partials, and then right now price is around this area. Yeah, this is where, so I just left a few orders. I'm not a swing trader. I don't like to hold positions for long. Personally, that's not my personality. But right now I just left just a very few orders to just see how price is going to play out. Now I posted this one in my Telegram channel. This was an analysis that I made. This is where the first entry was on a 5-minute time frame. So price came to that area and I sold it there. Partial profits had to be taken around this area, and this area. Now this was the analysis before it even played out. As you can see, now this is how it played out. So price played out exactly as I had anticipated this week. It was a good day in the office. So I'll continue monitoring this pair to see how it plays out, and I'll be posting reviews if it plays according to expectation. If it doesn't, of which it's also likely, we'll also be in a position to know if they have changed the market sentiment. So for more questions, please may you join the Telegram channel. There's a link in the description, and let me know what you think. Thank you for watching. See you in the next video. Thank you.